Welcome back to the World Crypto Economic Forum. One of the really hot topics in crypto today, and of course diversifying your portfolio, includes real estate. And what does that look like? Obviously, Miami's been doing a lot of that, but it's a trend all around the world. I just met some nice people at the Permissionless Conference talking a little bit about real estate, but I'm looking forward to learning from these specialists. Let me introduce you to our panelists. We have Natalia Karayaneva. She's the CEO at Propy, a serial entrepreneur, a software engineer, former real estate developer, and advisor to Arrington XRP Capital. Propy is a Silicon Valley startup automating the real estate transaction. Dave Hendricks is the CEO of Vertalo, connecting and enabling the digital asset economy. He's also the co-founder of Series X1 Digital Asset Securities and co-founder of Live Intent, where he's the lead guitarist. That sounds fun. I'd like to learn more. Not yet, because next up we have Mian Mohsin, and he's the founder and CEO at AKRU, a prop tech company democratizing CRE investments. He makes the inclusive, democratizing commercial real estate investing using blockchain and tokenization. Thank you, everybody. Great to have you here. So Natalia, why don't you kick things off here and tell us a little bit about the backstory of the first real estate NFT sale.
Hello, everyone. So great to see your friends, familiar faces. Thank you so much for setting up this panel about real estate and Web3. I'm the founder of Propy, as Tatiana just introduced me, and we did over $4 billion in transactions on blockchain already. But this year, I think we made this another wave of news by introducing the first ever NFT representing home ownership, real real estate, meaning that home ownership was transferred from one wallet to another wallet, and the real estate purchase happened really peer-to-peer. Last year we did it for the first time in the world in Ukraine, and then this year we did it for the first time in Tampa, Florida.
Excellent. Okay. So next up, oh, sorry, I had some notes here. Okay, so Dave Hendricks, can you tell us about security tokens? What is the latest with asset tokenization?
So asset tokenization, or digital asset securities, which is what I prefer to call it, is probably the biggest market that most folks don't understand, first of all. It's interesting. We've been doing this since 2017. And during that time, a whole bunch of different waves came through. You saw DeFi, NFTs, obviously all of this stuff came out of ICOs. But what digital asset securities, security tokens, tokenization of real assets is removing the friction that exists in the traditional private capital market space. It uses distributed ledger technology to encode the ownership of an asset, any asset, onto a distributed ledger, anything which is Turing complete, this works for typically. And then it enables an investor to own that in several different kinds of wallets and then trade it either peer-to-peer, which is kind of hard with securities, but it can be done, or on alternative trading systems, which are systems which are set up to enable the purchase and sale of digital asset securities. So really what it's doing is it's taking that stock certificate that you have, maybe that something that you see in a Carta or some other system, it digitizes it. It eliminates double granting of options, and then it encodes the rights of sale, the restrictions, the lockups, etc., into code, and then enables you to buy and sell it more easily than you can today with any private asset.
Do you think that will take hold more so like in the emerging world, or do you think it would be more useful in a country like the United States or somewhere that's a little bit more Western and kind of advanced?
Within 3 to 5 years, every single private asset in most developed countries will be turned into digital asset securities. It's going to be required by the regulators. Banks are going to want to know who owns an asset. This is the easiest way to prove that you own something via smart contract that's bound to identity that you can then, through confirmations and public ledgers. It doesn't work with private chains very well. Public ledgers. And it's every single share that you get, all the options, any shares you get from private companies, they're all going to be tokenized because right now, because they're not, it's very, very difficult to create markets. It's very hard to do price discovery. And I think that just like what Natalia is doing with Propy and making it easy to transfer using an instrument, in the form of a non-fungible token, and what Mohsin's doing at AKRU, you're going to see all of these assets go from paper and spreadsheets to things that you can hold in a wallet. And it's going to be everywhere, Tatiana. But it's very, very hard. There's a lot of regulations, and you can't just throw something together and copy paste and turn it into something. That's why it's taken so long, and it's so big. It's just the market is just ridiculously huge. I mean, it's a superset of every other market, basically.
Okay, and is there a bigger challenge with the emerging world to get it established because they have just less of a, I guess, bureaucracy to work with, or bureaucracy has a negative implication?
Well, for my friends here who can speak much more ably to the issues of title, the emerging world has rule of law and a title problem with regards to property and property rights, which is called problems for people since forever. And so I believe it should take hold there. But, the United States, Singapore, UK, Japan, a couple other markets will be the leaders, but usually everyone follows what we do here in the United States. So I think it will get adopted because cross-border transfers will be simpler. And so just for that one reason, it just reduces friction. It's very frictiony right now getting to this point, but when you cross the transom, it will be adopted everywhere. It'll just be standard.
Okay. Mohsin, how about you? Tell us a little bit about fractionalizing real estate and how do you democratize that process? Oh, but you're on mute.
Mohsin usually is heard. He never lets himself go without being heard. So Mohsin, usually he'll yell over the noise. Is it working now?
You're still muted, Mohsin.
Oh wow, there we go. Is this better?
Yes, there we go.
That's usually me and Dave, right?
Maybe it's better. Let's say.
No, so my name is Mohsin Masud. I'm the founder and CEO for AKRU. What AKRU does is we tokenize commercial real estate. So when we say we fractionalize commercial real estate, we're essentially tokenizing it. We're creating security tokens, but we're not just a tokenization platform. We are a full lifecycle solution from underwriting deals to the initial offerings and tokenizing them to offering a secondary market for accredited investors, as well as servicing for each of those tokens as well. And that is what really brings in the democratization and easy access, as well as adoption for the service as well. Some of the key things that are very important within commercial real estate, which differs from private market assets, is the way that real estate is transacted. In my opinion, real estate would never be a exchange product. It would always be an OTC product. So there's always some form of price discovery, not based on previous transaction data, but based on sentiment of the buyer and the seller and what they're willing to sell it for, what they're willing to buy it for. And so when you're solving for democratization within a space, you not only have to solve for the ability to purchase, but who has the access to it, how much access do they have to it, and it's not just a matter of financial, but the ability that they have to bring in the change or to acquire those assets and create gains from them. So, at AKRU, we've got a multi-token architecture, which, as Dave said, not only keeps things on chain and keeps that immutable record on a public blockchain, and definitely doesn't work on a private blockchain, but more so, it keeps the entire record of the transaction. So while you're transacting in US dollars, you're still able to keep the entire transaction from the movement of the funds to the transfer of the security tokens to who's making the management decisions on the asset to every distribution that you receive, the whole 9 yards. And that's our way to democratize commercial real estate and to make the exclusive inclusive, right?
Okay, cool. Thanks. So this is an open question to all of you. So feel free to jump in if anybody feels particularly passionate about it. But what would you say is getting the most traction right now?
So traction in terms of?
Just overall in the space. I mean, what aspects of the real estate market do you think are getting to the front of the line the quickest?
Yeah, see, real estate overall and I apologize for jumping in, but real estate, in my opinion, is the easiest and the most fastest asset to be tokenized amongst private market assets. It has most tangible value that's more relatable. It's got the biggest liquidity issues. It's the most illiquid asset out there and the hardest to transact with the highest amount of friction that's there. And that's why it's a target by a lot of different solutions being provided out there. The reason why we're able to solve for these problems in so many different ways, and what Natalia does is absolutely amazing in the way that she does it. What Dave does is extremely incredible, and what we do is on a completely it's an entire ecosystem solution of sorts for real estate, right? So each one of us is solving different pieces, and each one of us is bringing these amazing solutions and enabling these transactions, and all of us combined are kind of raising the tide in this entire ecosystem, along with the other players in the system as well.
So let me take another crack at that. I think if I understand your question, Tatiana, you're asking what sector in real estate is having the most success.
Yes.
So it's funny, you've seen a number of different, pretty much like commercial real estate, single family rentals, like mixed use, hotels. You've seen pretty much every one of these, come in as offerings. The ones that a lot of folks jumped on early because it was easy was small properties. And there are a lot of advantages to that. There's a bunch of companies in the single family rental space that are exploring this. I can't really talk about some of them because they're clients. They don't, but the ability to fractionalize interest in a single family rental and buy it very cheaply and put a marker on a specific like zip code or geography. This is happening behind the scenes, and people are not talking about it a lot. But single family rental purchases by large hedge funds and other organizations is one of the factors that's actually driving up costs in some markets, because they're looking at trends. So that's an area which is happening. It's happening behind the scenes because it's happening at such scale that they don't do small press releases. I think Natalia's got some examples from what she's doing that can give you some trend stuff there. But I would say before I let her have the mic, and she'll do just great on this next section. But commercial real estate will be the biggest piece of this in the next 2 years. Like, end of story, period, whatever. They're all going to have to recap. These guys are real estate, commercial real estate, and debt are the same market. And as these guys go into foreclosure, or they figure out that they're over their skis, they're going to have to sell off part of their real estate holdings to diversify, to get cash to meet their lenders, and they either sell the property or they've got too much ego and they don't want to sell the property and give it receivership. So they're going to fractionalize parts of massive stuff in the big cities because people are not going back to offices. There are big problems with occupancy. It's going to be huge, and it's not going to be like bare asset coins. It's all going to be digital asset securities and real estate, and services like Propy and AKRU are going to benefit from this as they reduce the friction in the process of transfer. So there you go. Natalia, it's all you now.
I love your predictions, and I hope they will come true. I'm a believer they will come true. That's why we're in this space. I would give a controversial answer to this question. That's why I smiled, Tatiana, when you asked this question. Right now, the largest adoption of real estate in Web3 is actually in digital land and metaverses. About $2 billion are invested in digital land. So people are hungry for gamified real estate. They understand it's real estate, but they know it's gamified, it's part of their community and so on. But now to get to the serious line, the main applications in real estate and Web3 are the following. First one is fractional ownership. That's where Mohsin is focusing on. Dave is doing security tokens. Fractional ownership is always a security. We can fractionalize residential, commercial, it's a security. We can also securitize equity in homes. These are securities. We're not doing fractional ownership at Propy. So fractional ownership right now is having an amazing traction. And I'd love Dave and Mohsin actually to mention some numbers, but it's an extensive capital being now driven to fractional ownership in real estate. Then the other one, the second real estate application and blockchain is what we are doing. It's transferring ownership via blockchain, ownership of a whole property. And that's why it's not a security. When you sell your home, it's not a security. And thus you can transfer home ownership from one wallet to another. And that's the essence of Web3 phenomenon, right? Internet was to transfer information. Now Web3 is the new phenomenon, new technology that is transferring value, rights, ownership, including home ownership. And the traction here with our company is $4 billion that is being transferred and processed on chain entirely. Now, the third example, which still doesn't have that large traction because it's new, but it has a very decent traction. It's crypto mortgages. So there are companies like Milo, Abra is getting there, XPTO, Helio, that are dedicated to provide lending for real estate purchases. Other use cases are slower in adoption, such as land registries on blockchain, because it's all connected to governments, transition, and so on. We believe that we have to build those technologies for the industry, for the consumer, and then the government will just have to adopt those private technologies based on public blockchains, rather than go after government and sell and do transition and education and so on. There are obviously a couple other applications, but I think those are most frequent that you would see when researching Web3 in real estate.
Okay, so we're getting a little bit closer to the end of the panel. I wanted to ask you guys, what could go wrong? All this sounds wonderful, but what are the blind spots that people are not thinking about that could be problematic in this world? Or is it really such a rosy picture? Natalia, maybe you want to go first. I think you might have a hard stop.
The challenge is always, I think, education, awareness for the consumers. But last year helped us a lot, right? When consumers trusted the security of smart contracts and they started to acquire NFT art, digital assets via NFTs, meaning they trust their wallets, they trust the protocols, and that's why they are ready to pay millions of dollars for digital art. But we still have a lot to do to educate real estate developers, real estate funds to really trust this technology and trust this new way of providing liquidity in the real estate industry. Many would mention that the regulatory environment is very hard, but it is what it is. You just follow the rules, you apply the new technology while being compliant in the US. This is what we're doing. We found a way. We're working with the brightest minds in the country. And yes, it was challenging and expensive, but it's just doable.
Great,
Absolutely. The regulation is the biggest risk. And if enough people are not following regulations and they get cracked down on, then all the good actors kind of suffer from the loss of trust from the people, for sure. When people say, oh, this is not a security or that is a security, just because someone claims it doesn't mean that it qualifies as a security or not. What is more important is how does it really function? How is it being how is it being sold? How's it being traded? How's it being treated? And whether it's registered, unregistered, under what category it is. And compliance is absolutely 100% important. There's a regulatory framework there for a specific reason. And despite whether we agree with it or disagree with it, we have to function within that. And that's definitely some of the biggest concerns. Expensive, but very much possible, very much doable, and that's how it should be done. And that's one of the biggest reasons that could cause trouble within the space, for sure.
Dave?
Well, ICOs and other sorts of projects are great for raising capital. People love to invest in early stage price and late stage liquidity. That is not the best use for digital asset securities. I would vote to digitize, fractionalize, tokenize an existing asset for the purposes of diversifying, taking some money off the table, etc. While we see a lot of issuers who want to raise money on digital asset securities, it is not a panacea, and it will not make your offering more attractive. In fact, it will increase cost, and you will disqualify many investors going this route. But if you have an asset, an existing mature asset, and you want to make it more marketable, more liquid, and be more investor friendly, digital asset securities are a great use of that technology. But it does not have any magic. It's not like magic beans for raising money against something that no one else will invest in VC or on a crowdfund platform or something like that.
Dave, you're absolutely right. I agree. Sorry, it's just not everything can be tokenized, and I think all three of us have touched on this topic multiple times, sharing the same stage. Yes, everything can be tokenized from a technical perspective, but everything should not be. You have to tokenize the right assets. You have to tokenize the right product. Otherwise, it's just you're not going to see the adoption on it, for sure.
Great. This has been quite an education, everyone. I appreciate it. So are there any final words before we sign off? We, of course, have the live chat going on. I know that the folks there may have some questions for you if you want to speak to them offline. And I know that there's a networking tool, so hopefully you all can connect. Any final words maybe before we sign off into the next panel?
Thank you much for having us. This has been an absolute pleasure. If anyone needs to get a hold of us at AKRU.co, and I'm on LinkedIn as Mohsin Masud.
And if you're in Austin for Consensus next week, Vertalo is in Austin. So make sure I'll put my name here and my email address, because people do use email. And it's still the killer app of the internet. It always has been, always will be. Sorry, Discord or Telegram. And talk to you all next week.
I'll be there. Hope to run into you. That'll be nice.
That's great.
Thank you all. It was great to chat to you, and come to innovate with us in the real estate and Web3 space. It's a huge, enormous market globally. So we're always here to new entrepreneurs to support. And if you are buying or selling a home, go to propy.com so we help you.
Very cool. Thanks, everyone. All right, we'll be right back with the next speaker.
Thank you.
Bye.
Bye.